Welcome to Chapter 2. Today, we're diving into the fascinating world of international trade, legal regulation, and conflict of laws. In our globalized economy, businesses operate across borders every day, but this comes with unique legal challenges. This chapter will help us understand why international legal regulation is so important, how key organizations promote and regulate trade, and what barriers can stand in the way of free trade. By the end, you'll have a solid grasp of how international cooperation helps resolve legal conflicts and what obstacles businesses face in the global marketplace. Before we get into the details, let's talk about what you'll take away from this chapter. By the end, you should be able to explain why we need international legal regulation, especially when laws conflict across borders. Understand how international treaties, conventions, and model codes help standardize global trade practices. Identify the key international organizations that play a role in promoting and regulating trade. Discuss the barriers to free international trade and how they impact businesses. These objectives will guide our discussion and help you focus on the most important points. Let's start by breaking down international law into two main branches. First, there's public international law, which governs relationships between states and international organizations like the UN. Then there's private international law, which deals with conflicts between laws of different nations, especially in areas like trade and commerce. The big idea here is that international cooperation is essential to ensure smooth cross-border transactions and resolve disputes that arise when countries have different laws. Now, let's talk about what can get in the way of free international trade. These barriers can be economic, legal, or even political. Some of the most common ones include tariffs, which are taxes on imported goods, and import quotas, which limit how much of a product can be brought into a country. There are also embargoes, which are complete bans on trade with certain countries, and hidden subsidies, where governments give financial support to domestic businesses, giving them an edge over foreign competitors. And of course, differences in national laws can create legal hurdles, making it tough for businesses to operate smoothly across borders. One of the biggest challenges in international trade is the conflict of laws. This happens when a legal dispute involves parties from different countries, and we need to figure out which countries' laws apply. For example, imagine a contract is made in England but needs to be fulfilled in India, whose laws govern the contract. Issues often come up because different countries have different definitions of what makes a contract valid, or they might disagree on how to enforce it. These conflicts can make international business pretty complicated, and they require careful legal navigation. To tackle these challenges, international conventions and treaties are crucial. These agreements help resolve conflicts of laws and create standard practices for global trade. For example, the Rome Convention of 1980 deals with the validity of international contracts, while the New York Convention of 1958 makes international arbitration easier, providing a way to resolve disputes without going to court. There are also model laws developed by organizations like the UN that help harmonize trade practices and make it easier for businesses to operate across borders. Now, let's talk about the key players in international trade regulation. The United Nations (UN) is a major force maintaining peace and promoting human rights while also codifying international law. UNCITRAL, the UN's trade law body, works to harmonize trade laws through conventions and model laws. The International Chamber of Commerce (ICC) promotes global trade, sets business standards, and runs the International Court of Arbitration. The World Trade Organization (WTO) is another big name. It facilitates free trade, resolves disputes, and reviews national trade policies. Other organizations like the OECD and UNIDROIT also play important roles by developing economic policies and harmonizing private international law. Let's look at a real-world example to see how conflict of laws can play out. Imagine a contract dispute between a company in country A and a company in country B. The issues here could include different legal definitions of what makes a contract valid, disagreements over which countries' laws should apply, and challenges in enforcing legal decisions across borders. In cases like this, International conventions like the Rome Convention or arbitration under the New York Convention can provide solutions. This case study really highlights the complexities of international trade and why having standardized legal frameworks is so important. To wrap up, here are the key points to remember from this chapter. First, understand the difference between public international law and private international law and how they both play a role in global trade. Second, recognize the barriers to free international trade, like tariffs, quotas, and legal differences. Third, be aware of the challenges in resolving conflict of laws in international disputes. And finally, know the roles of key organizations like the UN, ICC, WTO, OECD, and UNIDROIT in regulating and promoting global commerce. These insights will help you navigate the complex world of international trade and legal regulation.